Good welcome, everyone, to another podcast from Traders Community, brought to you by traderscommunity.com. And it is the calm before the storm. Another bearish day for the most part, as people still filtering through what happened the last couple of days. Nasdaq actually did finish up. It was pretty well all on the back of Oracle. So we're going to talk quickly about the markets today. Particularly natural gas was a big one. The bond market, how it's all reacting and what's going ahead with the FOMC tomorrow. We got the glorious Madavi here. And we'll go through a few things of him regarding that as well, of course, and the Nasdaq being his little baby. So remember, this is not financial advice. It's just a couple of, I don't know what you'd call us, but going through what we've seen, what we're watching, our strategies, and what we're hearing around the desks out there. And hopefully that can help you. It's been a really good couple of sessions over the last few weeks. So without further ado, let's get into it. So right now, we have oil trading down at 118.48. We did have API already out. And remember, all this stuff is on the website around under the barrel. And you've got a lot of the big oil and gas people contributing to that. So we did get up to plus 2H to give us a glorious short up there at 123.5. As you can see on this hourly chart just here, we did trade down under 117. We also did have the OPEC report, the monthly report MMOR before the market. And it looks like a lot of what this is some position taking ahead of tomorrow's FOMC across the board, and oil no different. Plus, it got some selling that happened with natural gas. So Natty, as you remember, has been a really nice, good short setup. And sometimes if you're the right way, you can be lucky, because people that doubt these setups, it's all maths. So basically, if there was something bullish here, it would have gone up less. If it's bearish, given it was plus 2.8 and it broke, and you got the kiss of death right here, classic symbol. And then what happened was Freeport LNG came out and said it's going to take a lot longer. Remember, there was talk that in 3 weeks this could be fixed. It's not going to be. In fact, it's just going to be slight maintenance in 3 weeks. So that created a tremendous movement. It actually got under 7 at one point, so it's roughly 20%. It settled about 16% down. So massive move. Remember, I've always said, dribblers, beware of these markets. These ain't for the faint-hearted. Leave it to the professionals. And I mean almost specifically to that commodity. They all have their very much specific, their intricacies. And as I've mentioned many times, Madavi and I don't trade markets we don't know. So we will comment on them if it affects, say, inflation or something, like, I don't know, corn or something like that. S&P closed 3746. We did go to those new lows. We did go to that gap that was evident on the charts, and we've closed up from them. Again, a lot of this is just like a dishwasher game ahead of the market. The dribble index, the old Russell was the worst, and I saw somewhere that we went before lower than pre-pandemic lows. Not sure what that means when you look at a chart. Nevertheless, you can see how weak that is, 1712. Nasdaq was the strongest one today, as we said earlier, 11,355. Volatility, we're trading around 32. Let me just make this a 10-minute chart. And you can see we had this rise yesterday, right? But today all we did was get sideways. So it's like there isn't really fear. There's just widening of spreads. Now, this is based on spreads, so that's why it's up. But you can see, despite where we are, there doesn't seem to be a ton of fear out there. Okay, let's move on to the SPOOs. So this is the bond that we're looking at earlier, but let's look at the SPOOs. So the SPOOs, as you know, beautiful classical short off the tanking. So we have taken some back here because it's 8/8, the previous 8/8, and we're going to a massive number, so anything can happen, right? You can see the gap up here even showing on the weekly chart here, but basically we have the from the level here, we've taken back about a third of what we had going in tomorrow's number. Just common sense. And remember, as I said in oil, take profit if you got it. And here's the other reason on daily. You can see 4/8, almost 8/8 up here. And we're coming into this test. Remember, we were looking for this test. That was our minimum target. That happened today. Okay, so it's kind of the gap we're talking about. So that held. So we can see, and we had a flat Tankin and Cajun pulling it up. You can see the gap here. If we go to the 5 minutes, you can see really perfectly how that all filled. So we filled that gap. Remember that low I just showed you on the left. And see what's beautiful of using maps, you can use visual as well. And then we bounced back over that, and we came right into the cloud here. So clinical stuff. This was worth 40 handles, this move. So, nice stuff. Okay, let's talk NASDAQ and bring Madavi on, because that was very different to the S&P, and a lot of it to do was with Oracle. You there, mate?
NASDAQ, yeah, man. It was, and I don't know. NASDAQ, we traded in a really tight range today. False breakouts and false breakdowns all day, and just, I mean, I came in, up a bunch and gave it all back. Just
what was interesting, because as you know, Madavi's at NASDAQ, and I'm more SPOOs. So they were trading that different that I remember I was going, what are you talking? What do you remember that?
Yeah,
they traded that different, So
I made more money with SPOOs than I did in NASDAQ today.
Well, so SPOOs was nice and clinical. So really, there wasn't a buy, and it took a lot of discipline to hold off till we hit that support when it failed and bounced back up. And on NASDAQ, NASDAQ was a lot weaker yesterday. So it tested this minus 2/8. It failed to break down. It looks like it went under yesterday's low and failed to break down, and then that's what made it difficult, no doubt. If I go to...
It was kind of a difficult day, man. It was just...
Yeah, so this move here, for example, that you're talking about on NASDAQ, never happened in SPOOs. That's where you had trouble with, I think.
Yeah, it was just total BS.
So SPOOs was nice and boring, which suits me. And also on weekly NASDAQ, look where we are. We're at that 5/8, all that noise. So these levels are what you want to have an eye on. You want to have a plan going in tomorrow with what Jerome Powell's... So it's two components. One is what it comes out with. So as we mentioned yesterday, they've been pushing. They said on Friday, hey, it might be 0.75, which really is the sort of thing he's going to do. He's got to do something hardcore to stop inflation. Yes, most of it is beyond his reach with supply and a government that's just desperate for votes. So it's become very unstable in the US. A nice way to put it, probably. So he's got to second guess, but he's the man that's getting all the blame. And some of it rightly so, right? So let's not mince it too much. But what it means is they've got to, more than normal, kind of get the market so there isn't too much of a shock. So I may be really cynical, but so it was Barclays and Jefferies on Friday. We had JP Morgan and Goldman last night. And there was even and also Dudley, who used to be on the board, came out today, says they will do 75, but they should do 1, or he might have even said they may do 1. I mean, so now at the situation, the market shouldn't be surprised. Traders, the dribblers on TV will be different if 75 basis points happens, right? So 50, they go, oh, okay, it can't be that bad. So, 75, okay, they're serious. 1, if it happens now, would be probably like 75 if they haven't warmed it up. So there's your levels. Now, what you want to do on your charts is know where these important levels are. Because guess what? All we do is math, and most of the algorithms of math are like math-based. And you know what the news is going to be? It's going to be all around that. So you got that number drops. Half an hour later, you have Jerome Powell's conference. That's going to be very important. First, their projections and their plans and how he talks, right? it's kind of a rock and a hard place because he can't be too dovish. We had a mate go on about that not long ago, right? Saying, it's all him, it's all that dovish. And he can't be too hawkish because then it wrecks. Because remember, it's not just about the bloody stock market. That's but that is a confidence thing. It's more about bonds. They're at critical levels. And it's about currencies. Look where the dollar yen is. Look where the euro is. That is more. These guys are financial guys, not punters and dribblers on the bloody stock market, hoping for a massive collapse or hoping for a massive rally. Anyway, so get your levels planned. Anything else you want to add to that, Madavi, about Big Pally?
Yeah, Mom. I mean, he's basically, it's not just the cut he makes, you got to see what his words are afterwards. That's gonna,
100%.
And how, I mean, we all know inflation's rampant. Basically, not too many people see how we're going to come out of this without going into deep recession. And I wonder if he's going to change his words to that. Talking about exuberance, maybe.
Well, so that you're exactly right, mate.
Exuberance. He starts going, we're in trouble.
Well, so that's the bottom line, is right. So he's got it. It's a fine line between destroying the economy and all the work all that money that Bernanke and all those guys pumped, all that fiscal spending that's come out with Obama and then Trump and then Biden. It's a lot of money, and there's a lot of disparity between wealth now. All these factors are real, right? Sorry,
the thing is, he gives the markets notice, and I wonder when he's going to quit giving the markets notice and being.
Well, yeah, that's what I was talking about. That 0.75. Now I know our mate Roman hates that. He's soft as shit. But you got to think you got to balance through that, right? I would hate to be his job. I mean, and it's on him when Bernanke started the printing presses. Yellen, yeah, she was Fed governor. And then this bloke. So, at the end of the day, we don't know exactly what his thought process because we're not politicians. And he's not a politician either. He's a businessman, lawyer, but he did work for Carlyle. So remember, he understands market dynamics and economic dynamics. That's their game, right?
I think the problem Powell's facing is this. He doesn't have much. If this economy destroys it, he doesn't know what he has to bring it back, if ever.
Right. And I think part of the reason, and actually this idea came from you, is that he needs to raise it and has done for a while. So he has some gunpowder. Right now he's shooting blanks if it goes so bad.
Yeah, but I mean, he can only raise it so much.
Well, at least now I guess he can cut it if it comes to that. I'm not saying he's going to do it straight away. The problem isn't really here. And
the problem is it's since started in 1973.
Well, that's a whole different thing. But really, this started from long-term capital first. That was the first big bailout. And then what do they call it? No moral... no moral hazard in 2008. Yeah. And so the same people come along. So the other big problem here is Europe so they've never budged. It's still negative. Here's the point is, they haven't even raised there. It's still negative, right? So we've got that going on, and we're back to that pigs crisis potentially there. Europe's just a mess. Europe's a mess from, first we had Brexit, then just inane political situation, Germany and Russia. We went through all that before. So it's got them in this situation. We go on about cancelling Mbaka and all that. And now you've got this situation now. And just to show how pathetic, and actually I think I tweeted about this, the risk management was of transitions and for natural gas. Just think about this. So Germany basically, however, got hoodwinked or whatever with Russia, obviously a lot of money, but they could have been much more independent, stronger than what it was. One thing. So we fast forward along. We now get to the point, okay, we're going to rely on LNG, which is ships, availability, the weather in the US or whatever, if they're getting it from the US. Basically, you can only really get it from Australia, long way away, Indonesia, Qatar, and the US. And so most of that's taken care of. So we have the Freeport, which we're going to go through next on natural gas. I'll show you what I mean. We have the Freeport LNG situation. So all of a sudden, boom, there's no natural gas for a while for them. It's just, that is symbolic to me of the economic policy and leadership, and not just energy, but economic, that's gone on for quite a while. 2008, we all know the no transition, ESG, greater, we all know all that stuff. We then also all know when Biden comes in, his first promises, here we are. But it's a succession of this nonsense. And that's pretty well symbolic of it. We will look at that in a sec, but first let's look at bonds. That's what really matters. Here is the 10-year, almost up at plus 4H. We looked at this yesterday. This is very overbought from a technical point of view, right? But look how oversold it got. So you got to keep that in mind if you remember the Adams theory of fractal recollection. So that can totally replicate that before it does something. So we're right up here. We got almost a 350 today. You see that? In fact, this says we did. I didn't see it at 350, but perhaps it did. That's your yield. Look at your price. Remember, look at your price is very important too. Almost minus 2.8. So we know we're really wicked. So that means they have built in a 0.75. 90% is pretty well what that Fed probability tool sells. Okay, so that's that. Apple was a good one, as you know, lately. But look what it did today, just churned. Okay, so that also tells you a lot of people have covered their positions. They spent yesterday and today ahead of this number. A pro is going to be very limited to how much as he has open right now. He's on a hiding to nothing, right, if he gets it wrong. You can see NVIDIA just pumping this line. So a lot of these are desperate things. If these fall down from here, it falls out of bed. Big day tomorrow, but you have gaps of below. So keep all these levels in mind. Let's look at energy, like I said. Let's look at natural gas. So here is the 5 minute. So if you recall, we went through the trade we had of short. It rallied through the day. It got to plus 2.8. It gave us actually a perfect short. And really, here's where we've gone short. So it's broken down, test. We got the kiss of death right here. It was already a spat in between plus 2.8, the Cajun. And so what, sometimes if you've got the right way, it'll happen. Here's where the announcement for Freeport LNG. This move is huge, right? This is 5 minutes. So remember, if you're a punter or dribbler, you're not right in it, this isn't your market, this all goes wrong. And if you're an averager, you get destroyed. So these markets aren't like a lot of these stocks that are run by one or two people, and people still get wrecked on them. I looked at a couple earlier, Revlon, a few others that they pumped up. But look at this market. Now, significantly, this has just gone sideways since. What this did for Germany and Europe that's taking LNG, the opposite, right? Because they're not getting this gas. So just think about this. This is... we are getting really hot, but we've just come out of shoulder. So all of a sudden, we're going to look at that storage report on Thursday. How much is actually getting pumped into the salts, right? And how much? What's happening there? The storage or whatever. Okay, or they're going to decrease demand. That's going to be a big thing to watch. If you look at this on a weekly. Remember the impulse. And look what it did. This is after the number. So this is where the short went on. Do you remember you worked weekly, daily, all the way down? And look what it did. It just went slice through tanking. So the only way you're getting that was if you had automated orders, which you could have done off that system. On daily, this was where we've been watching short, right? Broke this high, Cajun, and here we are in all this overbought situation. So I know a couple of good blokes got short up here. But look what happened. Nothing holds that. So that's a thing. It's just like order flow. I mean, when a fundamental thing changes in commodities, particularly if it's been stretched into one way, that's the sort of thing that will happen. Same thing happened in oil. You don't see it so much here, but look again. We went to new highs and we failed. Same pattern we just went through on Nasdaq. It's all clinical shit, right? Most dribblers, they want to buy it up here. You know, look at some of these crap stocks they've been running, like absolute shit stocks. Some of them are bankrupt. What's the upside on them? The only way they can go up, short covering. Well, if that's the only reason, as I said, you're buying something, you will get raped. You'll get wrecked. So same mentality here. Once you're going against it, and you're fighting against people that are actually with size, putting on hedges, getting out of positions, whatever it may be. And usually when people are short, it's for a reason, right? So keep that in mind. So look at the daily. Daily, you can see it even clearer here. That was your sell. And if we on the 5 and all that, that was plus 2H. But look at that, and look what held it again. So all this work around tanking. What's going to be interesting, not just for S&P and bonds, but also stuff of commodities. Nearly all the commodity, this is kind of the only guy standing. All the other commodities are getting wrecked. So at the end of the day, so what happens is I noticed if you get on Twitter or something like that, or listen to Kramers, they're always just looking to buy something else. Sometimes it's better just getting cash. So why would you get out of other stuff than get into oil up here? Downside's pretty pronounced. The risk, right? You wait to see what happens tomorrow. Use your grid. Your support is all these levels down here, all the way 109, 110. Your resistance, it needs to break this, and you got all this free money up to 129. Free room. This here, by the way, today's high for this contract was the highest since 2008. For the whole sequence, it's up here at 129. Okay? That's about it on commodities and bonds. Should we look at crypto? Crypto doing what it does best. Make the non-believers bigger non-believers. And really not much of a bounce. I did, and I think we tweeted it, that Michael Satar from MicroStrategy said, look, enough with the BS. I don't have to sell everything at 21,000. It's like I'm hedged to 3,000, something like that. We have enough cash. What's funny enough, it did get down to that level it was meant to liquidate. And you can see it bounce back up, and it's still just sitting around there. So it didn't even really bounce. If we go to Ethereum, which was the real dog of this pony show, look at this. So, I mean, people are saying buy it, but you need to see volume, you need to see good over, the minus 2.8 on this. This is a daily, is all the way down here. $611. If you believe in it. Interesting game. Anything else, Madavi, we need to look at? I think stocks, there's nothing special, is there?
No, I did one crappy stock. I mean, there was a couple of great plays you called I missed out on.
Oh, yeah, I forgot. So a real good trade today. And I got to say, I saw it pop up, BA, and I wanted something to hedge against the shorts in case it held, but I wanted to keep the S&P, right? So Boeing came out with a good report, and a bloke I follow, actually he's on Twitter, used to be a really good floor trade. He's still a really good trade, he's just not on the floor anymore, up there in NYMEX land. Great bloke. So he pointed out that what was going on, and so today they released their orders, but they had orders from Ryanair and Lufthansa, and he showed me their whole book. I liked the setup, so we bought it, and did better than what we have. Mixed results on Boeing, don't we, over the years? And, so this was a nice one, and the good thing with these good stocks, these heavy stocks, they're good for your leverage, right? So I'm bringing you up a 60-minute chart. So maybe come up. You can see what it's done. That's live. So we got it actually when this. So we've already done this, right? It's gone down. It failed to go down with the rest of the market. This is where we got long in this little bounce here. So obviously not the bottom. That's your bottom. So it was certainly a trade based on fundamentals and the technical aspect of this. We're in minus 2.8, so all those obviously will be better here, but we didn't have the fundamental reason to buy it here, and we hadn't seen the SPUs, etc. hold. So, yeah, that was a good $5 trade right there for those ones. And remember, if you trade options, these ones are pretty heavy. Some option, which is good, that's what you want. A lot of option market makers aren't in a lot of stocks anymore. I can't remember. There was a good little one. So what's been going on, a lot of these de-SPAC stocks are getting pumped. So what's interesting with a lot of day traders, they don't look at the overall trend. It's like, this is why they blow up. They're oblivious to what's going on in the overall market, right? It's getting destroyed, which means people have got less and less capital. You know, with all the dribbler stocks, we have the DDD. And so they just keep running stocks and more people get caught. And if I can think of it as like CDMA or something, they ran this one from $1 to $4.40, $4.30. And you could short it, which is interesting, no cost. So we actually did a short on it, went straight back down to I don't know, we were out by then, but down $1.50. So beware of them. A lot of these are just pump and dumps, i.e. people getting out of them. Now, so you can go with it with the orders, or you can look to short them. But beware. Pump and dump, not in the real negative one, but people are caught on them. And people just, that's the way they buy. And the dump, what I'm saying, or trying to say, it's more because they run out of buyers. There's no players. I don't think people understand how much people are lost. And the dribblers are also a lot of the crypto people with those, so it's mainly little people. Okay, so here's another one that we watch. We have watched over the years, Revlon. Most of you know about it. If you've got a mother, girlfriend, sister, or really anyone, you shouldn't discriminate these days. A lot of people wear Revlon makeup. Truth be known. What happened is, they called Chapter 11. Actually, I don't know if they've called it yet, actually, or an article, at least on Friday, said they're going to file. So it got wrecked all the way down to 80. 80, is it 80? Let me see. I didn't quite get under $1. So 107. A lot of big guys are short this. They know because of their debt situation. There's a lot of big short bond, and that's the way they want to be. This is headed to oblivion. There's been a couple of bailouts over the years. You might remember when they were running the Kodaks and companies like that last year. Was it 2 years ago now? This was one of those ones, and they redid the debt. Now we have a much worse debt situation. So go on the website. You'll see it all in the weekly. Just how difficult the situation is. So this is a company that's filing for, got massive amounts of debt. Something's got to be renegotiated. Chapter 11. Consumer spending's gone. It's got more problems than you can imagine. So big boys are short. There was a squeeze on it today, and to me it was just a great short. And sure enough, it was. It got over $3. A buddy alerted to me around here. Unfortunately, we couldn't borrow any stocks, so we couldn't do the short. How I should have traded this was either selling calls as a way to get short and buying it back because the volume was immense, or you could have bought puts. Anyway, regardless, you can see what happened here. So now you have an ABC. If it holds here, which is right there, it has a chance of going up 150. But this is a real punter and dribblers. There is so much better opportunities in this sort of stuff. But keep an eye on it. If this goes bankrupt like Hertz, it goes to the bulletin board. It will get traded if people still trade it. Remember, all that stuff happened in the bull market. Tesla, someone wanted me to look at. It's holding this triple bottom down here. You can see the gap from Friday. Interesting game. There was an article out this morning that Elon Musk is going to meet the Twitter board on Thursday to discuss where we're at. I think we talked a fair bit about that yesterday, Madavi and I. So it'll be interesting where that is, and that obviously affects his stock. So that's pretty well all from me. We don't want to drag on too long. You have all the go to the all this data will be on the website. Go to your weekly to get your level. Read, just go through this again, and you can get the same charts as I said from Sierra charts. Great deal. And that's what you need to watch. Just it's all maps. Look at these. Look at how this grid works and the reaction around Ichimoku. Components. There was something else I wanted to show you. What was the other? So bear with me one sec, and we will bring this up. So I just want to see what happened over in the last couple of hours, after hours, if it's worth going through. So, yeah, all this is here, energies, go through all those. So gold was a big loser today, which is a lot of people will be asking me about. And I'll look at that chart after this. So, in inflationary times, traditionally, that would go back up back in the day. I think my personal theory, is a lot of your gold bugs got into crypto rather than... So, traditionally they go gold, silver's cheaper, they get into that, and then crypto popped up, right? So they're all getting wrecked. You know my view on silver, we've gone through that enough, and gold, we'll go through them real quick. You can see what happened in the other safe havens. Bitcoin, 21 grand. Ethereum, 1100. We just looked at that. Ripple, 31 cents. Anyway, here's all your other stuff. There was only two people up today, technology and energy. Energy was way up, came down. This technology was basically because of Oracle. Okay, after hours, that's pre-market. Okay, after hours you had 5. They announced a stock repurchase for up to 100 million. They're barely budged on it. Moderna, up at 1%. The FDA advised their 2-dose COVID for kids 6 to 17. Monster also did a repurchase. Look at them all pissing their money against the war here. I hope it's the bottom. Monster up 1.1% of that. Olin did an operations update. That's for epoxy resin. Can't say I know a lot about that, but I would assume that has a lot to do with chemicals and oil. Planet Labs got smashed, down 10% on their Q1. They beat on revenue, but guides, really nothing real. They must be expecting something a lot better in the guides because they're in line. So people, you can see what happened there. They announced a strategic relationship with, actually expanded with Bayer. Sprinkler was another, this is borderline dribbler. Borderline, wouldn't say it's quite there yet. CXM down 6.3%. UPS up 0.1%. They had an agreement with the Pilot Association. Remember today, FedEx was a monster. Let me, somewhere up here. Look at this. It dragged itself, by itself, dragged up the transportation index. It's up $28, $29 really, 14%. When they announced new independent directors and a 53% quarterly dividend. So that's important. While yields are going up, they're going to have to raise their dividend if that's their gain to increase. So I'm going to be watching, depending where oil is, but it's going to be interesting what the big oil companies do with their dividends, with all that. See how it goes. Okay, so that's as far as your bonds go. You can look here. Bonds were a lot stronger today after yesterday's sell-off. A 30-year was up 7. The big one, the 10, up 12. And the 2-year up 16, right? So, sorry, a lot weaker. Did I really just say stronger? The yields were up a lot more significant. And that was obviously just seeing who's listening. So there you go, people. Be prepared for tomorrow. Remember, trade accordingly. Be careful what you're in around these news bites. The markets will be thin and machines will be playing fun and games. Make no mistake about that. So there we have it. Bit of a bear day, bit of a bear crush. Don't be this guy. Don't get crushed by it. Okay, well, thanks everyone joining us. Remember, like and subscribe. Share it to people that you think that's valuable, and we will possibly be here tomorrow. See how we go. So, Johnny, by the way, is working on a new index. We have the Dribblers Dirty Dozen, as you know, our bear index, a short index for the dribblers. So he's working on the Dribbler Vortex, a long side index. Obviously, nothing to put in right now, but he's working on that, different things with all the categories, given we're so in the bear market, which is either just started or doing a little bit of work here. Anyway, catch you, like, subscribe, all that good stuff. Help us out, love us, leave us, whatever. Bye now.